Banking has always had kind of this conundrum with technology is trying to bridge that gap of making it a good experience for the customer, yet people we have to protect things so securely, because all the other data points and analytics that are out there, well, people use that for what? To try to get at the bank. They try to get in to take consumers' money and take over their identity. Well, what's the purpose of taking over their identity? Because they want to get something of financial value from it. So it's the good versus evil almost. We put things out there, and we want to try to have the latest technology, but you also have to have the safeguards to go along with that. And sometimes it's a little less convenient than people like. It's also very costly. Jeff had mentioned the labor being the #1 cost. So that's the case in banking as well, but right there next to it is technology. We spend tons of money on technology. Some of the innovations over the years that we're always going to replace the branch as people changed. ATMs came out. Oh, we won't need branches anymore. Well, ATMs are still around. We still have branches. Then it was telephone banking. Well, we won't need branches anymore. Well, they're still here. And telephone banking is still here. ATMs are still here. Then it was online banking. Well, ATMs are still there. Telephone banking is still there. Online banking is still there. So are the branches. And everybody got one of these things in their pocket. And now they can, 24 hours a day, check their account. They can deposit a check. They can transfer money. I can pay you. You can pay me.
Awesome.
So nobody's going to need branches anymore. Well, people are still coming to branches, not as much, and that's where the data kind of comes in. We're trying to bridge that gap, providing an experience at all levels of interaction. You had mentioned millennials and baby boomers. Well, we have the greatest generation. We have the millennials. We have the Gen Xers. We have the millennials. We have Gen Ys. I mean, everybody in banking, they all expect to be treated the way they want to be treated, and that's differently. They have different expectations, and some bridge all of them. The thing that I think is really dominating technology in banking is helping people to protect their money. The fraud prevention. You probably all heard about the chip cards, chip and pin or chip and sign, and there's a lot of misconception out there, because we got a lot of things on October 1st. My card doesn't have the chip on it yet. I won't be able to use it. It's like, no, you can use it. It really, it's out there. It should help prevent some fraud, but it won't necessarily do that. In the U.S., the trend is that they're still going to use the chip card, but signature anyway. So I don't know that really protects a whole lot against fraud. The chip and pin technology, where you have to enter a pin number, does reduce it a little bit. So the jury's still out on how much that will help. But going back to the Great Recession, I mean, banking is a very heavily regulated industry, and that sometimes interferes with some of our technological adaptation too, because we have to really fully vet everything and make sure that it's never going to create harm either to a customer or to the banking industry overall. And many community banks like we are don't have the resources to really develop all that technology on our own. We do some things on our own, but we rely on a lot of third-party vendors. And part of the regulation is you really have to know who that vendor is and make sure that they have all the safeguards in place to protect that information, so we're not some data breach somewhere, and 2 companies away, all of our information is exposed to someone else. So it is a very methodical process. And technology changes so fast too that it's really tough to be on the bleeding edge of it, because you spend all this money and the next thing you know, I'll use the mobile banking for example. We were a little slower adapting to that, and at that time you're trying to figure out, okay, is this thing called iPhone really going to be big, or BlackBerry is really it, right? And we chose to hold off long enough where we saw BlackBerry wasn't an issue, so we went iPhone and Android, and that's paid off pretty well. But that would have been a very costly endeavor to go down.